Welcome to the deep dive, everyone. So glad you're here with us today.
Glad to be here.
So, imagine this. You have a 5-year-old, heavily degraded RTX 3090 graphic card.
Oh yeah, a real classic at this point.
Right. It's probably caked in dust. The thermal paste is essentially turned into chalk. And yet, this exact card is currently trading on the secondary market for $1,500.
Which is just, it's insane.
It's a completely absurd premise. If you operate under the traditional laws of consumer tech, this makes zero sense.
Exactly.
We've all been conditioned by Moore's Law for decades, you know? You buy top-tier hardware, you drive it off the lot, and 3 years later, it's relegated to the bargain bin.
Right, because the next architecture is always twice as fast and half the price.
Exactly. The depreciation engine is like a fundamental law of tech economics. But if you step into the market today, in 2026, that engine isn't just stalling out.
No, it is violently shifted into reverse.
Yes. We are looking at a landscape where a 5-year-old piece of silicon is worth exactly what it cost brand new half a decade ago, or, double what it cost on the used market just 24 months prior.
It really forces a complete recalibration of how we assign value to compute. We are entirely detached from historical pricing models right now.
Totally detached. And we have a massive stack of sources today to figure out why. We're pulling from Wikipedia entries, financial market reports from Kearney's Perlab, deep technical blogs from Spherin, and even ground-level reality checks from the RGPU Reddit community.
It's a very diverse set of data.
It is. And the mission for this deep dive is to unpack this whole Ramageddon or, Rampocalypse situation.
Right, the ongoing 2025 to present global memory supply shortage.
Exactly. We want to understand exactly why building a PC or running AI has become impossibly expensive for you, the listener. We're going to look at how it's structurally rewriting the tech industry and what survival strategies exist right now.
Because looking at the data from TrendForce, the cloud analytics from Cast AI, and the physical manufacturing metrics out of TSMC, reducing to a simple shortage is a huge mischaracterization.
Yeah, it's a good point.
This isn't a pandemic-era supply chain hiccup where, a few container ships got stuck in a canal.
Right.
We are observing a permanent structural reallocation of the world's silicon supply. It's moving away from the consumer edge and going directly into the hyperscale core.
Okay, let's unpack this, because the friction at the consumer level right now is just brutal.
It really is. And that crossfire is most visible in the utter collapse of the MSRP.
The manufacturer's suggested retail price.
Exactly. The pricing models set by companies like NVIDIA and AMD for the consumer market have essentially become fictional numbers.
Pure fiction. Look at NVIDIA's GeForce RTX 5090. The MSRP was announced at $1,999.
Which historically is an astronomical premium for a consumer card anyway.
Right. But today, the absolute floor for a base model is hovering around $4,099.
And that's if you can even find one.
Exactly. If you want a custom overclocked variant from an AIB partner like Asus or MSI with, premium power delivery, the secondary market is commanding anywhere from $3,000 to $5,000.
It's just wild.
And the moment Best Buy or Micro Center gets an allocation, bots and desperate buyers clear the inventory in under 8 minutes.
Yep. But it's not just the Halo 2 GPUs, right? It's the mundane stuff, too.
Oh, absolutely. Standard DDR5 memory modules, just the basic kits you slot into a standard workstation, have seen contract prices surge over 100%.
Wow.
Yeah. A 32-gigabyte kit that was $149 is now sitting at $239. And standard 1-terabyte NVMe SSDs, they basically doubled from roughly $45 to $90.
The cost of baseline digital existence has just been hiked across the board.
It really has. Which brings us to the whole Micron situation, which I think is fascinating.
Oh, the death of Crucial.
Yes. Micron killing off the Crucial brand is arguably the most glaring leading indicator of this macro shift. Crucial has been the definitive consumer memory brand for 29 years.
A staple for anyone building a PC.
Right. And they didn't just scale back operations. They entirely liquidated the consumer division effective early 2026.
Because the margins on a $150 stick of RAM sold to a gamer simply do not justify the opportunity cost.
Exactly.
They're tying up fabrication lines that could be churning out high-margin, enterprise-grade memory for massive data centers.
So the consumer market is literally being abandoned by Tier 1 manufacturers.
Completely abandoned.
Which brings us back to that Reddit anecdote with the RTX 3090s.
Right, the guy who bought 8 of them.
Yeah, so this user on Reddit bought 8 of them 2 years ago for $700 a pop. He was building a local AI rig, long before running a 70 billion parameter model on a local machine was mainstream.
Ahead of the curve.
Definitely. But now he's trying to expand his cluster, and those exact same cards, the 5-year-old ones, are going for $1,300 to $1,500 used.
Right.
He pointed out the sheer absurdity that a 5-year-old architecture is appreciating in value. But the reason it's appreciating isn't because of the compute die, right? It's because of the VRAM.
Precisely. The secondary market doesn't care about the ampere architecture of the 3090's core processor.
They don't care about the GPU speed at all.
No, they aren't buying the GPU. They are buying the 24 gigabytes of GDDR6X memory attached to it.
Ah, okay.
Because when you're dealing with local AI inference, particularly large language models, the workload is almost entirely memory-bound. It's not compute-bound.
So it's not about doing the math faster.
Exactly. The bottleneck isn't how fast the tensor cores can multiply matrices. The bottleneck is the memory bandwidth and the sheer capacity required to load the model's weights into the VRAM.
Along with the KV cache?
Yeah.
Right.
Right, the key value cache that stores the context of the conversation.
Sure.
If your model parameters exceed your physical VRAM, the system has to offload to the much slower system RAM via the PCIe bus.
And what happens then?
Your token generation speed drops from, say, 50 tokens a second to maybe 2 tokens a second.
Oh, wow.
Yeah, it becomes virtually unusable.
So VRAM has basically become beachfront real estate.
That is a perfect way to look at it.
Right, like it doesn't matter if the house, which is the GPU chip in this analogy, is 5 years old or the roof is caving in. If it's sitting on 24 gigabytes of premium unobstructed beach, the property value skyrockets.
Yep.
Because developers absolutely need that specific acreage to run their inference workloads without hitting that PCIe bottleneck.
And that's why the 3090 has become the undisputed meta sweet spot for the cost to VRAM ratio.
Right. But the problem with that beachfront real estate skyrocketing is what it does to the rest of the market. It completely prices out the lower socioeconomic tiers of tech.
It's devastating.
When hobbyists and AI startups are vacuuming up 5-year-old gaming cards for $1,500 and standard DRAM costs double, the downstream effect on entry-level hardware is just awful.
Gartner's latest projection really highlights this.
Oh, the laptop projection.
Yes. They're projecting that sub-$500 laptops will be financially unviable within 2 years.
That is a staggering blow to digital equity.
It really is. We are talking about the eradication of the accessible tier of computing, the very tier that has democratized education and internet access for the past 2 decades.
And we're already seeing the early tremors of that, too. Look at Sony. They took a $100 loss on every single PlayStation 5 sold over Black Friday in 2025.
Wow, $100 loss per unit.
Yeah. And they aren't doing that as a charitable contribution to gamers. They are eating the soaring component costs just to prevent their console ecosystem from collapsing under the hardware prices.
They're just hoping to make it back on software licensing, I assume.
Exactly. And Apple, they didn't even try to absorb it. They announced immediate price hikes across iPads, Macs, and the Vision Pro line in June 2026.
So the baseline cost of computation is permanently shifting upward.
Yes. But, if a massive corporation like Sony is bleeding cash on memory and standard DDR5 is doubling in price, the physical raw materials must be vanishing somewhere upstream, right?
Oh, they are. They're vanishing into advanced packaging facilities.
Okay, let's get into this, because this is the physical root of the crisis.
Right. To understand the structural deficit, we have to look away from standard GDDR6 or DDR5 and focus entirely on high bandwidth memory, or HBM.
HBM.
Yes. The global silicon supply chain is choking on the physical physics of HBM and TSMC's CoWoS packaging process.
Okay, let's get into the mechanics of this. We know HBM isn't like a standard DIMM stick plugged into a motherboard case. It's stacked vertically, right?
Correct.
But why is the manufacturing of these vertical stacks physically breaking the global wafer supply?
What's fascinating here is that it all comes down to the spatial economics of the silicon wafer.
Okay, explain that.
A standard 300 millimeter silicon wafer has a finite amount of surface area.
Right.
When you manufacture standard DRAM, you are putting relatively simple, flat memory arrays. But high bandwidth memory requires manufacturing individual memory dies, thinning them down to microscopic levels, and then stacking them.
How high are we talking?
Currently, they're stacking them 8 to 12 layers high.
Wow.
And they use through silicon vias, or TSVs, to connect them.
Through silicon vias?
Yeah, TSVs are essentially microscopic copper wires punched straight through the silicon to connect the layers vertically.
So it's like drilling elevator shafts through a 12-story skyscraper instead of building a sprawling single-story suburb.
That's exactly it. A suburb with massive traffic congestion, yes.
Right.
But building that skyscraper requires significantly more complex circuitry on each individual die to manage the vertical signaling and the thermal loads.
Because all those layers get hot.
Exactly. Consequently, the physical footprint of an HBM die is much larger than a standard DRAM die.
Oh, so it takes up more space on the wafer to begin with.
Yes. Furthermore, because the stacking process is so incredibly delicate, the defect rate is higher, which drags down the overall yield.
So you get fewer usable chips per wafer.
Exactly. The math from the fabrication floor is just brutal. Producing a single gigabyte of HBM requires roughly 3 to 4 times the raw silicon wafer capacity as producing a gigabyte of standard DDR5.
Wait, 3 to 4 times?
Yeah.
So it's a direct cannibalization.
Absolutely.
Yeah.
Every time SK Hynix or Samsung commits wafer starts to HBM for an AI accelerator, they are actively choosing not to print the memory that would have supplied 3 or 4 consumer laptops.
That is insane. And the volume demands from the AI accelerators are just scaling exponentially, aren't they?
Oh, without question. Look at the progression. NVIDIA's H100 required 80 gigabytes of HBM3.
Okay, 80 gigs.
Then the H200 bumped that to 141 gigabytes.
Couple.
And the upcoming B300 Blackwell architecture demands an unprecedented 288 gigabytes of 12-layer HBM3E per GPU.
288 gigabytes. So every architectural generation is effectively doubling its claim on the global wafer supply.
Precisely. And the packaging itself is a massive bottleneck too, right?
Right. TSMC's CoWoS chip on wafer on substrate, because even if you manage to print the memory, you still have to attach it to the GPU.
Right. And CoWoS is arguably the tightest choke point in the entire industry right now.
Why is that?
Well, you can't just solder these HBM skyscrapers onto a standard green fiberglass motherboard.
Right.
They require an ultra-precise silicon interposer. It's an intermediary layer of silicon that acts as a microscopic bridge, connecting the GPU die to the HBM stacks with tens of thousands of microscopic bumps.
Tens of thousands.
Yeah. Aligning and bonding these components without thermal warping or microscopic fracturing requires extreme precision, and TSMC's CoWoS capacity is absolutely maxed out.
So they are basically the sole arbiter of who gets a finished AI accelerator and who doesn't.
Exactly.
That explains the market consolidation then, because 3 companies, SK Hynix, Micron, and Samsung, control essentially 100% of the HBM supply.
Yes, it's a complete oligopoly.
SK Hynix is dominating with roughly 62% market share, Micron has about 21%, and Samsung holds the remaining 17%.
Right.
And the financial reports indicate they are entirely booked through the end of 2026 and well into 2027.
Sold out for years.
Yeah. They hold so much leverage that Samsung and SK Hynix successfully dictated a 20% price hike for their HBM3E supply contracts for 2026.
It is a supplier's dream and a buyer's nightmare.
Mm.
But, that 17% market share for Samsung didn't come easily, which really highlights how difficult the physics of this process is.
Oh, the thermal issues they had.
Right. Samsung spent roughly 18 months floundering with severe thermal issues on their 12-layer HBM3E stacks.
What were they doing wrong?
Well, they attempted to utilize their older 1-alpha manufacturing process node, while SK Hynix and Micron had already transitioned to the more efficient 1-beta node.
Ah, I see. And when you have 12 layers of memory firing simultaneously on an older node, the thermal crosstalk just cooks the chip?
Precisely. They repeatedly failed NVIDIA's stringent qualification tests because the memory stacks were literally overheating under load.
Just melting down in the test phase.
Basically. So when they finally resolved the issues and passed qualification in late 2025, the industry reaction was immense.
I read about that. Customers were reportedly declaring Samsung is back.
Yeah, and that wasn't just corporate cheerleading. It was a massive sigh of relief from an industry that desperately needed that 17% wafer capacity to come online.
To prevent a total supply collapse.
Exactly.
But wait, I have to challenge the logic of the fabrication companies here, though.
Okay, go ahead.
If you are SK Hynix or Micron, right, you have a completely captive market, you have buyers willing to accept 20% price hikes, and you are sold out for 2 years.
Sounds like a great position.
It does. So why is the response not a massive immediate injection of capital to build more wafer fabrication plans? If demand is this inelastic, expanding capacity seems like the only rational move.
Well, the capital's there, but time is not. Yes. You cannot spin up a cutting-edge EUV lithography fab the way you build like a car factory.
Okay, how long does it take?
An advanced node fabrication plant takes between 3 to 5 years to construct, calibrate, and reach commercial yield.
3 to 5 years.
Yeah. The lead times on the extreme ultraviolet lithography machines from ASML alone are measured in years.
Yeah.
But beyond the sheer time required, the geopolitical gridlock has artificially capped existing regional production too.
Ah, the regulatory shifts between the US and China.
Right. Looking at this strictly from an impartial supply chain mechanics perspective, the regulatory environment throughout 2025 severely disrupted expansion.
How so?
Due to fears of U.S. regulatory backlash and impending tariff structures, manufacturers like Samsung and SK Hynix proactively halted the sale of their older semiconductor manufacturing equipment to Chinese entities.
Oh, I see. Which means they couldn't offload their legacy tools to free up floor space for the new EUV machines. Nor could they rely on Chinese foundries to take over the production of low-end consumer DRAM to free up the top-tier fabs for HBM.
Right. They just created a massive logjam.
A self-inflicted logjam.
Yes. And a logjam compounded by materials shortages that most people don't even know exist.
Wait, really? Like what?
The Wikipedia source material specifically points to a bottleneck in glass cloth.
Glass cloth.
Yeah.
That sounds like a rudimentary cleaning supply, not a critical semiconductor component. How does glass cloth halt the production of a $40,000 AI accelerator?
I know it sounds strange, but it is a specialized high-performance glass fiber substrate.
Okay.
When you are pushing 22 terabytes per second of memory bandwidth, the electrical signaling degrades incredibly fast if the substrate isn't perfect.
Ah, so it's about signal integrity.
Exactly.
Right.
This glass cloth is engineered for ultra-low signal loss and high thermal stability, making it mandatory for the advanced packaging of these chips.
And is there a shortage of it?
Yes. A single Japanese chemical firm, Nitto Boseki, holds an overwhelming monopoly on the specific grade of glass cloth required by TSMC.
A single firm?
Yes. And they cannot physically spin the glass fibers fast enough to meet the demand.
That is wild. So you have a $1 trillion industry bottlenecked by a single factory in Japan producing microscopic glass threads.
It perfectly illustrates the fragility of the entire stack.
It really does. I mean, we have a silicon shortage, a packaging shortage, a legacy equipment gridlock, and a glass fiber monopoly.
It's a perfect storm.
But despite all of this friction, the purchasing isn't slowing down at all. Which brings us to the entities actually writing the checks for these components, the hyperscalers.
Right, the hyperscalers. The capital expenditure from the top four, Amazon, Google, Microsoft, and Meta, is the gravitational center of this entire crisis.
The numbers here are just mind-boggling. Financial reports indicate they will spend a combined $700 billion on CapEx in 2026 alone.
It's a number so large it loses all meaning.
It really does. It's larger than the GDP of entire nations. And it's being deployed in a single fiscal year purely to build data centers and hoard AI hardware.
Yep. And they are issuing what the industry calls open-ended orders to the memory manufacturers.
Great. What does that mean in practice?
An open-ended order essentially bypasses the traditional procurement process. They aren't negotiating a price per gigabyte or setting a strict delivery schedule.
So they're just throwing a blank check.
Basically, they are telling SK Hynix and Micron, whatever total volume of HBM you can successfully yield, we will purchase it, ship it, and send the invoice.
Unbelievable.
Price elasticity simply does not exist for the hyperscalers right now. Compute capacity is the sole moat in the AI arms race.
Right. If you don't secure the hardware, your foundational models fall behind and your $1 trillion market cap evaporates.
Exactly.
The most terrifying manifestation of this, I think, is OpenAI's Project Stargate.
Oh, Stark.
Yeah, the Tom's hardware reporting and the deepdive.ca breakdown of this initiative highlight that OpenAI signed direct letters of intent with Samsung and SK Hynix to secure supply.
Right.
And the estimated requirement for Stargate is 900,000 wafers per month.
And if we connect this to the bigger picture and contextualize that 900,000 figure, it represents roughly 40% of the entire global output of DRAM.
40%.
Yes, one single infrastructure initiative driven by one AI lab is attempting to absorb nearly half of the world's memory production capacity.
That is genuinely hard to wrap your head around.
And interestingly, they are actively purchasing undiced wafers.
Wait, undiced, like before they're cut into chips.
Exactly. They are buying the raw, uncut silicon platters directly from the foundry to bypass logistical delays, and they'll handle the packaging through secondary partners.
Wow. They're that desperate to secure the supply.
They are.
And that level of procurement fundamentally alters the business models of the hardware providers, doesn't it?
Yep.
I mean, NVIDIA is the prime example here. Culturally, I think we still view NVIDIA through the lens of PC gaming and GeForce graphics cards.
True. That's their legacy.
But their Q4 earnings report completely destroys that narrative. Their gaming revenue was $3.7 billion.
Which is a healthy business in isolation.
Right, until you contrast it with their data center revenue.
Which was $62.3 billion in a single quarter.
$62.3 billion. Data center operations are generating almost 17 times the revenue of their gaming division.
Yeah, gaming constitutes roughly 8% of NVIDIA's total business now.
So they're barely a gaming company anymore.
When 92% of your revenue is generated by enterprise clients buying B200 accelerators by the rack, your fiduciary duty to your shareholders dictates that you abandon the consumer.
Wow, yeah.
The internal resource allocation shifts entirely. Reports from the Information and Bench Life indicate NVIDIA has no plans for new gaming GPU architecture launches in 2026.
No new launches at all.
None. And they are actively cutting production of the RTX 50 series by 30 to 40%.
So they are purposely starving their own gaming ecosystem.
Yes, to divert those GDDR7 memory allocations and TSMC wafer starts toward enterprise products.
Man, if NVIDIA is openly starving the consumer market, the traditional PC OEMs like Dell, HP, Lenovo, they must be in absolute crisis mode.
Oh, they are. Their entire business model relies on predictable, low-margin component costs to build millions of corporate laptops and consumer desktops.
Right. And what happens when those costs aren't predictable?
The margin structure collapses.
Yeah.
During HP's Q1 2026 earnings call, they revealed a terrifying metric.
What was it?
The cost of memory as a percentage of their total PC build materials escalated from roughly 15% to 35% in a single quarter.
Wait, over a third of the cost of manufacturing a laptop is now solely dedicated to the RAM and the SSD?
Yeah.
Which leaves very little margin for the processor, the display, the chassis, or, actual profit.
Exactly. And Lenovo's response to this is equally telling. Their CFO described the cost surge as unprecedented.
I bet.
So they have shifted from just-in-time manufacturing to aggressive hoarding.
Hoarding memory.
Yes, they disclosed that their memory inventory levels are sitting at 50% above historical norms.
Wow.
They are tying up massive amounts of operating capital just to stockpile RAM, anticipating that prices will continue to climb throughout 2027.
That sounds like panic.
It is panic.
Okay, so we have hyperscalers with open checkbooks absorbing 40% of the global supply, OEMs panic hoarding inventory, and Tier 1 foundries constrained by physics and Japanese glass cloth.
Yep.
Where does this leave the actual software developers? Like, if you are an AI startup trying to build the next major medical imaging model or a mid-sized enterprise trying to fine-tune an LLM, you physically cannot buy a server rack of H100s.
No, you can't. The lead times reported by Spheron are sitting at 36 to 52 weeks.
You have to wait a year just to get the hardware.
Which forces the entire mid-market into the cloud. If you cannot own the compute, you must rent it.
Right.
But the cloud infrastructure is suffering from the exact same physical constraints, leading to massive volatility in what we call cloud droughts.
Cloud droughts. Because the cloud isn't magic, it's just someone else's computer, and those computers are also sold out.
Exactly. The major providers, AWS, Google Cloud Platform, Microsoft Azure, are prioritizing their own massive internal workloads and their multi-year enterprise contracts.
Right. They're taking care of themselves first.
Exactly. So if a small startup logs into the AWS console to rent an 8-way H100 instance on demand, they are frequently met with capacity unavailable errors.
So they can't even rent it?
No. The traditional on-demand compute model is failing under this scarcity. To survive, developers are being forced into hyper-agile, highly volatile infrastructure strategies.
Okay, what does that look like?
The two major shifts are the rise of the neoclouds and the mastery of the spot instance market.
Okay, let's break down the neoclouds first, because companies like CoreWeave, Lambda, and Spheron are having a massive moment right now.
They are. Neoclouds are GPU-centric infrastructure providers.
So they just do GPUs?
Yes. Unlike Amazon or Google, they do not have proprietary foundational AI models competing for internal resources, nor are they burdened by legacy enterprise databases and web hosting workloads.
Gotcha.
Their sole function is to acquire GPU capacity and lease it out.
Huh.
But even they are supply constrained.
So even the specialists don't have enough.
Right. which makes mastering the spot market the actual key to survival.
The spot market. The economics of spot instances are fascinating to me. A spot instance is essentially the standby flight of cloud computing, right?
That's a good analogy.
The provider has idle GPUs sitting in a data center that aren't currently being utilized by customers paying the full on-demand rate.
Right.
So instead of letting them sit idle and burn electricity, they auction that compute capacity off at a massive discount.
And the discount could be profound. The CAS AI report on GPU cloud costs reveals that utilizing spot instances can yield a 40% to 70% cost reduction compared to on-demand pricing.
That's huge for a startup.
It is, but the pricing algorithm is fiercely dynamic.
Right. The CAST AI data highlighted a statistic that perfectly captures this volatility. The spot price for an AWS H100 instance located in the U-North 1 region in Stockholm.
Oh, yes. This was wild.
It dropped 88% between January 2024 and September 2025. It fell from $105.20 an hour down to $12.16 an hour.
But see, if we connect this to the bigger picture, that staggering price collapse is not indicative of GPUs globally becoming cheaper.
Right, it's just local.
Exactly. It is purely a reflection of localized supply and demand imbalances. The cloud market is not a unified global entity. It is highly fragmented by geographic region.
So how does that price drop happen?
Well, if a major enterprise in Stockholm finishes a massive training run and suddenly releases hundreds of GPUs back into the pool, the local spot price plummets.
Because suddenly there's a huge supply.
Right. But if everyone shifts their workload to Virginia the next morning, the price there skyrockets.
So survival dictates that you cannot be loyal to a specific data center or even a specific cloud provider. You have to be an infrastructure mercenary.
Precisely. The successful startups are deploying automated orchestration layers, often utilizing Kubernetes, to constantly monitor pricing APIs across AWS, GCP, CoreWeave, and Lambda globally.
Oh, so it's automated.
Yes.
Yeah.
When the algorithm detects that U-North 1 has dropped to $12 an hour, it automatically provisions instances there and migrates the workload.
But here's my pushback on spot instances and why they are so cheap.
Okay.
The cloud provider can reclaim that GPU at any moment, right?
Yes, they can.
If a full-paying customer logs in and demands that H100, AWS will terminate your spot instance with only a 2-minute warning.
That's a risk you take.
But isn't that like trying to bake a cake in an oven that might turn off randomly? I mean, if you are 50 hours into a distributed training run for a large language model and your instances are suddenly killed, you lose all the data currently held in the GPU's memory.
Right. You lose the gradient updates, you lose the optimizer states.
It's catastrophic.
Well, it is catastrophic if you treat a spot instance like a persistent physical server.
Okay, so how do they avoid disaster?
The shift in software engineering is moving from stateful dependency to stateless resilience. The Spheron technical blog details the exact architecture required to survive this.
Tell me.
You cannot rely on local NVMe storage. You have to engineer your training loops with aggressive automated checkpointing.
Checkpointing, meaning saving the exact mathematical state of the neural network at that exact millisecond.
Yes. The framework is programmed to serialize the model weights, the optimizer state, and the exact position in the data loader every 15 minutes.
Every 15 minutes.
Yes, and it pushes that massive payload directly to persistent, highly available network storage like an Amazon S3 bucket.
Ah, so the data is safely off the volatile GPU.
Exactly.
So if AWS pulls the plug and reclaims the instance, the node dies. But your maximum exposure is only 14 minutes of lost training time.
Exactly. The orchestration script immediately detects the failure, scans the global market for the next cheapest spot instance, spins it up perhaps on a completely different cloud provider like GCP, pulls the latest 15-minute checkpoint down from the S3 bucket, and resumes the training loop exactly where it left off.
That is so clever.
The Spheron blog actually highlighted a 12-person team that successfully trained a 70 billion parameter model for an incredibly low $11,200, utilizing this exact multi-cloud, heavy checkpointing failover strategy.
Wow, it's Darwinian engineering. The hardware scarcity is forcing software teams to build incredibly fault-tolerant, nomadic architectures just to survive the pricing volatility.
It really is.
But playing arbitrage across cloud regions is still fundamentally a band-aid, isn't it?
Yes, it is.
I mean, it manages the financial bleeding, but it doesn't solve the core physics problem that there simply isn't enough memory to hold these massive models.
No, it doesn't solve the root issue.
Which brings us to the actual engineering solutions.
Right.
Because software developers aren't just moving workloads around, they are actively mutilating the AI models to make them fit into smaller memory footprints.
Well, mutilation is a strong word, but mathematically accurate.
Right.
We are witnessing a massive pivot toward model compression, and the primary vehicle for that is quantization.
Let's dive deep into quantization because I feel like this is where the software finally fights back against the hardware constraints.
It is.
AI models are essentially giant matrices of numbers or parameters, right? And traditionally, these parameters were stored in FP16, 16-bit floating point format.
Right. FP16 provides a high degree of precision, utilizing 1 bit for the sign, 5 bits for the exponent, and 10 bits for the fraction.
Okay, that sounds like a lot of data per parameter.
It is. It allows the model to calculate extremely nuanced gradients during training. However, 16 bits per parameter requires a massive VRAM allocation.
So what does quantization do?
Quantization is the algorithmic process of forcibly reducing that precision. So dropping from FP16 down to FP8, or increasingly INT4, which is a 4-bit integer.
Wait, you are intentionally throwing away the decimal points. You are sacrificing mathematical precision just to shrink the file size.
You're sacrificing the dynamic range, yes.
Mm-hmm.
But the brilliance of modern quantization techniques like zero-point quantization or outlier isolation is that developers have realized neural networks are highly resilient to noise.
Meaning they don't actually need to be that precise.
Exactly. The network doesn't actually need 16 bits of precision to determine that the next word in a sentence should be apple.
Right, right.
By quantizing to an FP8 format like E4M3, you effectively have the memory footprint of the model.
Have it. So a massive 70 billion parameter model that previously required 8 H100 GPUs strapped together just to hold the weights in memory can suddenly be compressed to run on just 4 GPUs.
Yes, and with a nearly imperceptible drop in its reasoning benchmarks.
That's incredible. You instantly double your available hardware inventory simply by changing the data type.
It is the most powerful deflationary force in the AI market right now. And the research is accelerating rapidly.
Oh, like Google's announcement of TurboQuant in March 2026? That was a watershed moment.
It was. TurboQuant actually moved financial markets.
Right. The day Google published the paper, the stock prices of the major memory manufacturers, Micron, Western Digital, took an immediate hit.
Because Wall Street algorithms realized that if software can magically shrink memory demand, the hardware monopoly loses its leverage.
Wow. So how good was TurboQuant?
Well, Google engineered it specifically for large language models and vector search engines, utilizing deeply optimized kernel-level compression.
Okay.
They demonstrated a 6x reduction in memory consumption for local LLMs, paired with an 8x performance enhancement in token generation on existing H100 hardware.
8x performance. When you can increase throughput by 800% through a software update, you drastically alter the hardware purchasing forecast.
You really do.
And it isn't just quantization helping here, it's architectural shifts too, right? Like mixture of experts or MOE.
Yes, MOE is huge.
Yeah. Instead of building one monolithic neural network where every single parameter activates for every single prompt, you build a massive router.
MOE essentially compartmentalizes the model. The DeepSeek v3.2 model, which was detailed in the Spheron blog, is the prime example of this.
Walk me through it.
It possesses a staggering 671 billion total parameters.
Oh, 671 billion.
Yeah. If it were a dense model, running it would require a supercomputer. However, the architecture is broken down into specialized experts.
So if you ask it a coding question, it routes the query just to the Python expert parameters. And if you ask it to translate French, it routes to the linguistics experts.
Exactly.
The hospital analogy from the blog works really well here. The hospital building is massive, but if you break your arm, you only interact with the orthopedist. You don't need the cardiologist to wake up and look at your chart.
That's a perfect analogy. For any given token generation, DeepSeek v3.2 only activates 37 billion parameters out of that 671 billion. Now, you still require substantial VRAM to store the dormant experts the entire hospital, but the actual compute cycles required to run the inference are reduced by an order of magnitude.
And if you combine MOE with 4-bit quantization,
Suddenly, massive frontier models become deployable on relatively modest hardware clusters.
that's amazing. But software tricks will eventually hit the Shannon limit of compression, right? I mean, you can only shrink a model so much before it loses its intelligence.
That is true.
Ultimately, the physical hardware architecture has to evolve past the CoWoS bottleneck we talked about earlier. And this is exactly what NVIDIA is attempting with the Rubin platform announced at GTC 2026.
Yes, the Rubin architecture represents NVIDIA acknowledging that the era of the discrete GPU is over.
Over.
Yes. They are no longer selling a PCI card that you plug into a third-party motherboard. They are shifting entirely to POD-scale infrastructure.
Right. Looking at the NVIDIA newsroom specs for the Vera Rubin NVL72 rack, it is intimidating. It isn't a component. It is a monolithic, liquid-cooled obelisk.
It's massive.
It integrates 72 Rubin GPUs and 36 custom Vera CPUs, all bound together by a 6th-generation NVLink switch.
And by co-designing the CPU, the GPU, and the networking switchboard as a single integrated organism, NVIDIA bypasses the latency of traditional PCIe lanes and Ethernet switches entirely.
Right.
The Rubin GPU itself is built to utilize HBM4, which, by the way, is what's driving the frantic 2026 wafer allocations, and it boasts 22 terabytes per second of memory bandwidth per chip.
22 terabytes per second. And crucially, the press release highlights the integration of the Grok 3 LPU within the rack ecosystem.
Yes, this is a vital architectural evolution.
Tell me about Grok.
Grok designs language processing units, LPUs, which are deterministic, highly specialized ASICs designed exclusively for ultra-fast, low-latency inference.
So they're different from GPUs.
Very. They are terrible at training models, but unparalleled at generating tokens.
I see.
By pairing NVIDIA's massive Rubin GPUs, which handle the dense compute required to understand the context of a complex prompt, with Grok's LPUs for the actual token generation, they create a heterogeneous inference engine.
Best of both worlds. The efficiency gains NVIDIA is claiming are hard to believe, honestly. They state the NVL72 reduces the number of total GPUs needed to train a large MOE model to 1/4 of what the previous Blackwell architecture required,
while delivering 10x higher inference throughput per watt.
If those metrics hold in real-world deployments, the NVL72 is a massive deflationary lever against the shortage.
It is. However, NVIDIA is charging an exorbitant premium for these POD-scale systems.
Well, of course they are.
Which has created a massive market opportunity for AMD to attack the lower and mid-tier markets.
We have to talk about AMD's execution here, because they have historically been locked out of the AI ecosystem due to NVIDIA's software moat, right? CUDA?
Yes. CD has been the undisputed gold standard for parallel computing for 15 years.
Yeah.
Every major AI framework like PyTorch or TensorFlow was optimized specifically to run on NVIDIA's CUDA libraries.
So AMD had the hardware, but their software layer, ROCm, was notoriously brittle and difficult to deploy. But the WayoVEX financial analysis points out that the financial pain of NVIDIA's monopoly has finally motivated the developer community to break the moat.
Necessity is the mother of invention.
Right. In 2026, AMD's open-source ROCm 7.0 platform has matured into a genuinely viable alternative. Startups simply cannot afford H100s, so they're assigning their top engineers to make PyTorch compile cleanly on AMD's MI300 and MI350 accelerators.
And AMD is heavily leveraging memory capacity as their primary weapon here.
How so?
Because they aren't rationing memory to protect a 92% enterprise margin the way NVIDIA is, they are flooding their cards with VRAM. The AMD Radeon RX 9070 XT consumer card frequently outperforms the NVIDIA RTX 5070 in pure rasterization, but more importantly, it ships with 16 gigabytes of VRAM compared to NVIDIA's 12 gigabytes.
For a local AI developer, those extra 4 gigabytes are the difference between loading an FP8 quantized model successfully or crashing to system RAM.
Exactly. AMD is effectively capturing the exact demographic that NVIDIA is intentionally abandoning.
So what does this all mean? It creates a fascinating bifurcation in the market. NVIDIA owns the absolute top-tier POD-scale enterprise market with Vera Rubin, while AMD is aggressively colonizing the mid-market and the consumer edge by weaponizing open-source software and higher memory allocations.
It really is a divided market now.
So the entire tech sector is fighting a multi-front war against this shortage. Software engineers are shrinking models, NVIDIA is building liquid-cooled monoliths, AMD is breaking the software monopoly, and hyperscalers are just throwing billions of dollars at the foundry.
But underneath all this innovation is a brewing legal storm.
Right, because when prices spike 100% in 24 months, regulators get involved.
The concentration of market power among the big three memory manufacturers has triggered significant legal action. According to the India Today reports, Samsung, SK Hynix, and Micron are currently the targets of a massive class-action antitrust lawsuit.
The complaint alleges that the transition to high-bandwidth memory was used as a pretext. The plaintiffs claim that the big three colluded to simultaneously slash the production of conventional legacy DRAM and deliberately exit mature product lines.
The legal theory is that by artificially constraining the supply of legacy memory under the guise of reallocating capacity for HBM, They manipulated the broader commodity market.
To drive up prices across the entire spectrum of consumer electronics?
Exactly.
I want your analytical read on this because it seems difficult to prove. On one hand, we just spent 20 minutes discussing the brutal, undeniable physics of CoWoS packaging, the wafer cannibalization, and the EUV lithography of bottlenecks.
Right.
Stacking 12 layers of silicon is objectively difficult and yields are low. That is a physical reality, not a conspiracy.
That is the defense's primary argument, yes. The physics dictate the constraints.
But
However, the prosecution will undoubtedly point to the historical behavior of the memory industry.
what's their history?
The DRAM market is a textbook oligopoly, with a well-documented, decades-long history of cyclical price-fixing scandals and Department of Justice investigations.
Oh, so they have a track record.
Yes. When you observe a coordinated 20% price hike on HBM3E contracts for 2026, coupled with identical strategic capacity cuts in legacy DRAM across all three supposedly competing entities,
You look bad.
it establishes a circumstantial pattern of behavior that antitrust regulators are highly incentivized to investigate.
Yeah, that makes sense. But whether it ultimately proves to be cartel behavior or just the harsh reality of semiconductor physics, the financial pain for you, the consumer, is locked in.
It is.
The real question is the horizon. When does the rampocalypse end? When does the supply curve finally catch the demand curve?
The timeline is fiercely contested among industry leaders, and it largely depends on how you model the demand for agentic AI.
Okay, let's hear the different models.
Well, a former Samsung semiconductor executive recently suggested that the crisis could resolve within 12 to 18 months.
That seems optimistic.
It is. He says it'll be driven by China's aggressive, state-subsidized push into legacy DRAM production, which could theoretically flood the bottom end of the market and alleviate pressure.
That's the most optimistic V-shaped recovery scenario. But the current executives running the foundries vehemently disagree with that, right?
They do. Micron CEO Sanjay Mehrotra stated on the record in June 2026 that he models the shortage persisting entirely through 2027, with supply only beginning to reach parity with demand in late 2028.
2028?
Yes, but the macroeconomic analysts are projecting an even longer winter.
Oh, no.
The Kearney Perlab analysis, which is corroborated by statements from the CEO of SK Hynix, models the structural shortage lasting until 2030.
2030, that is 4 more years of a broken consumer market. 4 more years of $4,000 GPUs and skyrocketing laptop prices.
Their thesis is based on the compute requirements of agentic AI. We are transitioning from generative models that simply output text to agentic models that execute complex reasoning loops, interact with external APIs, and run continuous background tasks. The inference compute required for a localized AI agent to actively manage your operating system is orders of magnitude higher than a simple chatbot query.
And the foundries just can't keep up.
The foundries simply cannot build EUV capacity fast enough to outrun that specific demand curve before the end of the decade.
Wow. This is where the macroeconomics hit the reality of daily life. I want to pose this directly to you listening right now. We're looking at 2 distinct futures. Are we currently inside a localized bubble, a panic-driven gold rush, where hyperscalers and OEMs are hoarding inventory they don't actually need, and the market will inevitably crash back to historical pricing norms within 18 months?
That's one possibility.
Or has the fundamental baseline cost of participating in the digital world permanently shifted upward? If entry-level laptops become economically unviable and robust local AI compute remains locked behind a $4,000 paywall, the implications for who gets to participate in the next decade of technological advancement are incredibly grim.
It creates a bifurcated society. Those who can afford the hardware to run localized, private agentic AI, and those who are forced to rely on heavily monitored, latency-bound, subscription-based cloud alternatives.
And we've mapped exactly how we arrived at this cliff edge today. We've traced the 100% price hikes and the death of consumer brands like Crucial back to the physical manufacturing limits of TSMC's CoWoS packaging and the wafer-hungry nature of HBM3E.
We covered a lot of ground.
We've looked at the hyperscalers spending $700 billion to absorb 40% of the world's memory, forcing developers to play high-speed arbitrage with spot instances and 15-minute save files just to avoid bankruptcy.
And the pushback from the software side.
Right, we've seen the software engineers fighting back with FP8 quantization and MOE architectures, while NVIDIA attempts to bypass the bottleneck entirely with liquid-cooled POD-scale rack systems.
It is genuinely the most complex hardware engineering and supply chain realignment in the history of silicon.
But I want to leave you with a final thought that steps outside the silicon entirely. We have spent this entire deep dive analyzing how to build massive 288 gigabyte memory chips, how to stack them 12 layers high, how to liquid cool racks of 72 GPUs, and how to pump megawatts of electricity into data centers just to make a machine process information.
We have. But if we look at the only truly generalized, highly agentic intelligence we actually know of, the biological human brain, it operates on a fundamentally different paradigm.
Yes, the human brain runs on roughly 20 watts of power. It is powered by a sandwich, not a nuclear reactor.
Exactly. And it manages incredible feats of reasoning without requiring constant, massive expansions of its short-term working memory.
Exactly. The human brain doesn't cache every single piece of context in perfect, high-resolution fidelity.
Hmm.
It doesn't use FP16 precision. It abstracts, it compresses, and crucially, it forgets.
It actively discards the vast majority of the sensory data it takes in.
Perhaps the ultimate solution to the 2026 memory shortage won't be found in fighting over microscopic glass fiber from Japan, or building larger silicon wafers, or suing memory manufacturers in antitrust court.
Where will it be found?
Perhaps the actual breakthrough will happen when researchers fundamentally redesign the architecture of neural networks to mimic biology, building AI that achieves true efficiency not by hoarding every token of data, but by mastering the art of gracefully forgetting everything that doesn't matter.
That is a profound engineering challenge. The current paradigm is brute force. The future must be elegant abstraction.
Keep questioning the systems around you, keep an eye on those VRAM specs, and we will see you on the next deep dive.